Hey traders, welcome to Charts and you know it, Charts and Coffee. Good to see everyone. You can't see him, but the cat is hanging out with us here today. So Charts, Coffee, and cats. So welcome to the show as always. We're going to be working with the TradingView charts a bit. A lot of folks have asked, Raghee, we've been using TOS quite a bit. Can you tell us a little bit about the indicators that are available on TradingView? Is this something that we can use? I'll tell you what, in an increasingly interesting brokerage space where we have some brokers that have really robust charting and order entry, and others who are mostly really a terrific order ticket, not really charting focused, but order entry and trade execution focused. Having a broker agnostic platform is great. I don't want this to turn into an infomercial for TradingView. I'm a fan. I'm a paying subscriber for going on 9 years now, I guess it's going to be. And it's just one of those platforms I love because it runs all my indicators. And unlike other platforms, if I'm away from the desk and I want to run a chart with my indicators running on it, it's the only one that I can. So for example, if I'm trading crude oil, and I don't know if you can see this, but I've got my grab candles, my wave, my multi-trend. I can run HPMRs on this. So I love having this particular platform. So a lot of folks have been asking me, Raghee, you still using it? Absolutely. Absolutely. That's one of the things that I use in addition to Thinkorswim. The second question I get a lot is, Rag, if you're trading futures, what do you do? And I'm going to bring up the trading panel because I haven't logged in yet so I could show you. There's a trading panel where they have a number of broker partners. If you are trading futures, let's say you're day trading with me in either the futures room or in my Sector Secrets Mastery, you need to plumb a futures feed into TradingView. And I get a lot of questions about this since a lot of you know the HPMRs, the hourly price movement ranges, are available on TradingView. TradeStation, I've been with them for many, 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 many years. Tradeovate, a lot of our members love the service. They're both great platforms. I don't have any personal experience with AMP, but a number of members have told me it's solid. But I'd have to say it's really Tradeovate, TradeStation in terms of popularity. Just putting that out there because ultimately having those two platforms, I know for me, have made a big difference in terms of my ability to help traders chart on platforms that they may not have access to, like Thinkorswim, and yet still have all the indicators that I use. So anyway, I thought I'd just take a minute. I know a lot of folks are still logging in. I thought I'd take a minute to showcase a little bit of the TradingView, which we'll use a little bit here in today's show. One thing that I love on TradingView is the ability to show you all the price-based volume. I call them volume ledges because it literally looks like ledges. If I'm scaling vertically this right side, the hard right edge of the chart, I can see where there are distinct levels where price and size are coexisting in a way that would tell us there should be support or resistance, or at least a lot of activity that occurred at that level. Activity means interest. Activity means attention. Volume means those things. And then ultimately, what we remember is if a bunch of traders are at a certain level, the idea that they're measuring whether or not they're up or down on a trade from that level becomes much more intense. And that then means there's likely to be more reaction at that level. Doesn't matter if it's a 5-minute time frame. Doesn't matter if it's a daily time frame. You can see my volume ledges here, or even a weekly, right? One of the things we're doing in the Sector Secrets Mastery right now is getting very attuned to the fact that based on the Fed Fund futures, I talked a lot about this a couple weeks ago in the light at the end of the bottom update over at the Simple Trading YouTube channel. And even last night, I got into it again, reminding everybody we have found a general area of where rates are likely to top out and when. By the way, 3.5 to 3.75% and December. And I explained what that means to a bottoming process. And I kind of gave it a title that just reminded everybody, while earnings are a very popular catalyst for volatility and popularly traded, I don't do that. I don't trade the immediate window of earnings. Rather, I like the ramp up in the post earnings environment. However, from a trading standpoint, that's a completely different conversation. A lot of traders are thinking, well, earnings will dictate what happens next in the equity markets. Wrong, gang. The Federal Reserve is the macro. They are the determining factor of what's going to happen next. And if they are projected to be going to 3.5 to 3.75% by December, and if that stays steady, and I show you how to measure it so you don't get caught up in all the gobbledygook on television. You know how to measure it. You can see it for yourself and understand it for yourself, right? And that's where confidence, by the way, comes from, understanding the process. Check that out in the free video. All right, that's what I wanted to make sure I shared with you all this morning before, of course, we get into your questions. So let's do that right now. And as always, gang, the show is about your questions. And let's go ahead and start tackling them one by one. First come, first serve, kicking it off with lots of good mornings. Absolutely, it sure is. Some of my traders in the Sector Secrets Mastery, if you haven't already checked out Nike, I know some of you may have gotten it, some of you may not have, but well on our way down from that sell the rip in Nike, our favorite little stock in that XLY yesterday. So yes, it's looking like it's going to be a pretty good start to the morning. All right, kicking it off with XLF. Nancy, I've got a short position that I'm looking to build in XLF. And the idea here is I don't want to short necessarily the S&P, which would be the next step up from the XLF, meaning S&P is that broader picture, and then XLK, XLF, and XLV are the next tier lower, and then the stocks within those indices and sectors will be the next lower tier. This is a relative outperformer to the downside in the S&P, and this is why it's on the radar. So XLF is definitely something we're looking to get into. Again, the last trade was a winner. Just want to rinse and repeat that particular sell the rip, or a bounce into the wave, or look at it as a mean reversion. Whatever resonates with you, whatever lingo you like to use, that's what we're dealing with in XLF on the daily. Thanks for the question, Nancy. Next up is thoughts on the S&P approaching overbought and the VIX at Darvis support. Josh, yes, we talked quite a bit about this yesterday in the sessions. And when you look at the S&P, the trend that preceded was down. Where we are right now on the S&P is resistance. We have still some resistance. And by the way, if you want to know what's going to happen with XLK, not that we're ever predicting, but we can look at what's inside the S&P. If we look at a motor and we want to know its capacity to continue to run, we look at the way the motor has been put together, right? The way that I look at that is in terms of the motor being the S&P, the pieces, right? The parts, XLK, XLF, XLV, and the individual stocks weighted within them. XLK is still pretty strong, but XLV really didn't do that much yesterday. XLF traded right up into the mean on the higher end of it. What we want to see is if this thing is going to fatigue. And if those sectors are likely to fatigue, so too is likely the S&P. Look at that Darvis right there, gang. That is a pre-drawn, pre-identified level using previous support and resistance, which actually makes it fairly unique in terms of a process of support and resistance, where a lot of traders like to project levels. Trend lines, by the way, are projections. Trend lines are projections. They're not previous support and resistance. So if you want to take advantage of the minor high-low swings in the market and use those previous support and resistance levels to automate these levels on your chart, it's free. Head on over to countdowntrader.com, download the Darvis 2.0. You will just simply not find anything that works more accurately across multiple asset classes and timeframes. And it's important enough that we at Simpler said, look, these are foundational ideas. These are foundational tools that we know are going to help a lot of traders. And that's why I think back in 2016 or 2017, we've been making this available for free for all these years. It's going to be a needle mover, and it plays well with the other tools that you probably already have on your charts. Love that Darvis. And now here's where you take the next step. Is the Darvis by itself enough? It could be. It could be. But if I can confirm with an indicator what's happening with price, are we in chop? Check. Are we nearly overbought? Are we at the high end of the range from a price perspective? And then sort of the computation of the range through an oscillator like a slow stochastic. Again, really simple. You can set this up on any platform, and we are approaching that 80 area. That's all syncing up really well. The needle mover this week is going to be probably the ECB in terms of the sentiment from a major central bank. But that's what I'm looking at. Now, the other question was regarding the VIX. Let's use that same logic here, gang. Yesterday, I told traders VIX is oversold. VIX is going to start to move back up. Why? Look, here's a Darvis doing its thing again. I mean, look, Nicholas Darvis showed us back in the 50s and 60s that there is a process to look at previous support and resistance, find those more important turning points, those pivots, those minor highs and minor lows, and automate this process of support and resistance drawing, which can be oftentimes very subjective. So there's the Darvis doing its thing. There's the slow stochastic. There's your signal. Gang, that's rinse and repeat. So love the question, Josh. Both those things coming together. Let's see what the market wants to bring next. I do not believe we're going to continue higher. I do not. Why? We're in chop and we're overbought. And by the way, if I'm wrong, that's what a stop loss is for. It's my job in my mind to not hedge, right? So, well, we could do this, we could do that. That doesn't help you all. I've chosen to trade in a fishbowl. It's an honor and a privilege to be able to do that. So now what I have to do is show why I want to do what I'm doing and do it. And then let the chips fall where they will. That's what trading is about, gang, right? That's what trading is about. So there's your synchronicity in terms of VIX and ES. And let's see what the S&P does now. Again, always remember, this could be not what the market's focusing on. This could very well be one idea, but the market's going to focus on something else. And that's something else for me. Keep an eye on those Fed Fund futures target rate probabilities, because if we start leaning towards 3.25 to 3.5, that's a huge macro needle mover for stocks to continue higher. Would I take a look at Boeing? Absolutely. And by the way, gang, what I explained in the last 5-6 minutes, if you watch this back on replay, if you understand what we're doing with the tools, gang, it is my passion to teach traders how to understand the markets in the most simple way with usually as many free tools as I can offer. Are there tools that are going to be for sale? Of course. But people always ask me, Rog, do I need this course? Do I need this tool? Yeah, eventually, if you find that I'm going to be a good mentor for you. But I always tell folks, check out the Countdown Trader. Learn what I'm doing. We share a lot of that there. And if you say, you know what? This is the way that I want to trade. I like these tools. They're moving the needle for me. Then absolutely come join me in a course, or better yet, come join me in the Sector Secrets Mastery. You know, at that point, hopefully I've given you everything you need to know to be able to understand the markets better and to determine if I'm a good mentor for you, right? I think that's really an important thing. Boeing. Man, this is a thanks but no thanks on that one. Kimmy, one of my closest friends in high school, her name was Kimmy. So Kimmy, I would say probably not. There's not a lot from here to work with. I would have to pass on Boeing. But Kimmy, what I would say is anytime you're looking at an individual stock, so you're at the granular level of index sector stock, right? The process that I teach, work it back up. Whether you go top up or bottom or top down or bottom up, it doesn't matter as long as you look at all three tiers. Boeing is involved in the Dow. Boeing is involved in a number of sector ETFs. So do a reverse search. Understand the ETFs that Boeing is involved in. because Boeing could then introduce you to its friends. And maybe there's a stock that has a better bullish structure or bearish structure than Boeing. So maybe Boeing is just sort of the first look at a group of stocks that are moving very similarly. But then you say, well, Boeing may not be the best opportunity, but other stocks in that group may be. So let that be the sort of the opening salvo, if you will, to how you will look for more opportunity in that specific group. All right, next up, and thank you for the question, Kimmy. Oh my gosh, I want to pronounce this name properly. And I don't know if it's a silent J. It's a very cool looking name. It's either Yokin or, yeah, I'm not going to even try to butcher that, but do tell me how to pronounce your name. You're tracking a stock or sector, and on the day the grab candles turn blue or it touches the 34 EMA, am I ready for entry? If the JT multi goes from a trend to a neutral, right? If our multi-trend, do I still enter? In that general question, if it's a fresh transition, yes. If the previous trend was set, remember, all of this hinges on the quality of the previous market structure. Gang, most traders don't have a very clear process for market structure. There might be some secret squiggles. There might be some very laggy EMAs or SMAs, even worse. We want a really accurate and sensitive way to understand momentum separated from trend. If you're looking at momentum and trend together, you are truly looking at market structure. But if you're looking at market structure through the process of uptrend, downtrend, it's laggy and it's going to be inaccurate. Here, what we have is, for example, on the S&P, we have a neutral market. But on the XLF, we have more of a downtrend that's doing exactly what you're talking about. If the previous trend was established, then I'm okay with that. But if it wasn't a trend, then that scenario that you just described, my friend, is not applicable, right? Is not applicable. So great question. I hope that clarifies. Chewy, sure. Uptrend. So here's Ambas. This is going to be where the battle is going to occur. Confirmed uptrend. Propulsion dots lit up. Green grab candles steady, right? Ignore the stochastic now, because the stochastic is a choppy market tool. Gang, the moment anyone's using an oscillator in a trend, they don't understand what an oscillator is designed to do. I'm just going to put that out there. I'm going to tell you that with my own oscillator. Push it aside. It's a trending market now. The wave is going to do a better job. The propulsion dots are going to do a better job. Your nemesis to more upside, or your target, if you're already long, step out in front of size, and that size is likely going to be waiting somewhere between this Darvis level here at about 45, 60 and change, and the 200 propulsion just above 46.20. Keep an eye on that zone. If you then want to say, but wait a minute, Rod, can I look at Chewy from the perspective of some volume ledges? Yes, of course. Do we have a lot of volume at that level? Wow, a whole lot less than I thought that would be there. Keep an eye on that level all the same. Doesn't mean that volume can't come in later on. Keep an eye on that. But notice your volume ledge right now is sitting at about 40. Your most important volume this year is at about $43. Probably pretty important that we maintain that. So 43 is your point of control on Chewy. Thank you for the question. All right, next up is, when I trade Forex, how much leverage do I use and recommend? They've dropped it. Before there was 400 to 1, then 400 to 1 turned to 100 to 1. I think it's 50 to 1 now. So I use whatever the maximum leverage in the US through a Forex broker is. So whatever the maximum is, that's typically personally what I use. But please remember, I've also been trading Forex since late 99. So it's been a minute. But yes, I'll use the maximum of whatever is available from that brokerage. Okay. All right, gang. Just like that. Boy, that 20 minutes flies by. So thank you as always for being a part of the Charts and Coffee Show. We need to get some Caffeinate and Dominate t-shirts made. All right. I will see you all tomorrow. Same time, same station. In the meanwhile, heads up. We've got the ECB tomorrow. We have existing home sales at 10 a.m. I'm going to see my folks in Sector Secrets Mastery here in just a moment. We're going to be day trading from 9:20 to 10:35. And then we're going to look for our swing trading setups. We sent out 3 alerts yesterday for some swing trading setups. I think one's going to hit the target on the open. Won't complain about that. So we'll be dividing up that session in Sector Secrets Mastery so we can still do our morning of day trading, Monday through Friday, 9:20 to 10:30, 10:35. And then we're going to switch gears and look at the longer terms. We're managing multiple time horizons, as I think most day traders should. Lots of opportunity out there. All right, gang, I'll see you in the next update.